Hello everyone, welcome to this weekly price action breakdown on EU. In this video, I'm going to break down last week's price action for you step by step, and most importantly, I'll explain exactly how you could have navigated through that price action, how you could have waited, observed, reacted, and most importantly, executed without losing your mind. I'll walk you through the valid trading opportunities that played out last week, and I'll show you exactly how you could have approached them from a structured and, more importantly, a non emotional standpoint. Now, first thing first, let's talk about what matters the most, and that is the higher time frame down liquidity and the higher time frame directional bias, right? Because you already know the truth. You could do every single thing right on your trade. You could build the perfect market context. You could build the perfect narrative. You could have textbook level key levels. You could have clean candle ranges and even have SMT divergence supporting your trade, right? You could even have precise timing. But if your higher time frame directional bias is off and your higher time frame drawn liquidity isn't correct, then none of that would matter because the reality is that that trade would end up being a losing trade and you would lose, right? You could do everything right. You could have everything. You could have as many supporting factors backing up your trade idea. But if the higher time frame price action is predetermined to go opposite of what you are expecting or what you are anticipating price to do, then your trade idea would lose. Your trades would end up being losing trades, and none of the market context or the narrative that you would have built would matter. That's how important the high time frame directional bias is, and that's why I always make sure to first of all determine the high time frame directional bias accurately before I could start waiting or before I could start looking for a trade idea on the lower time frame. So first of all, I'm going to break down this weekly price action for you here so you could see exactly how I determined my higher time frame directional bias and drawn liquidity for the week. So first of all, based on liquidity framework, what you can see is that with this move, we had taken out external range liquidity in the form of taking out this high and this high right here. So now the next logical objective or the next logical move for price was to fill internal range liquidity before it does anything else, right? And in this case, we had this clean weekly fair value gap sitting below current price action. And this weekly fair value gap became my short-term drawn liquidity for price to fill, right? Because we had taken out external edge liquidity, I expected or I anticipated price to push lower and fill this internal edge liquidity before it could do anything else. Now looking at the daily time frame, you can see that we pretty much have the same market context. ERL was taken, and now we can expect price to have a retracement profile lower so that we could rebalance and fill internal range liquidity and take out this daily swing low. On top of that, what you can see is that we also got this bearish CSD after we closed below this candle right here. This candle took out external range liquidity and then price closed below it, which meant that now we have a change in the state of delivery, and this CSD solidified this shift and confirmed that now we can have an expansion lower on the lower time frame so that we could so that we can take out this daily swing low and potentially fill the internal range liquidity on the daily time frame. So you can see that both the weekly and the daily time frame are showing bearish signs, right? And based on the analysis that we've performed, the higher time frame drawn liquidity for us for the week is this daily swing low right here in the weekly fair value gap, and our directional bias for the week would be bearish. And for that reason, I'd be looking for strictly bearish trade ideas on the lower time frame, right? Now let's move on to the 4-hour time frame and let's see how the week unfolded and how you could have navigated through it. Now, before we do that, you can see that at the start of the week we also had this newly formed daily fair value gap, and on Monday my expectations were simple. I was first of all looking for price to push higher into this daily fair value gap, and then form the high of the week there, and then expand lower from there, right? That was my working theory on Monday. I was expecting price to first of all fill this internal liquidity, fill this fair value gap, and then expand lower towards the this drawn liquidity. Now let me break down this 4 hour time frame price action for you here, and let me show you exactly how you could have traded it, navigated it, and what were the valid trading opportunities throughout the week. So first of all, on Monday, price was stuck inside this range, and above this range high, we had the daily fair value gap in the daily key level, and my plan for Monday was clear. I first of all wanted price to take out this range high and test the daily key level and form the high of the week there. And then from there, I wanted to see lower prices until we take out this higher time frame down liquidity, right? So on Monday, for the first half of the day, I sat back and waited for price to take out this range high before I could take an entry. And right here, during the 9 a.m. 4 hour candle, what you can see is that, let me show you. What you can see that is that we expanded higher, we took out the range high, we tapped into the daily key level, and once that happened at a key time, it happened during the 9 a.m. hour. Once that happened, I then dropped down to the 15-minute time frame, and from there I started looking for a bearish order block confirmation entry. Let me show you. You can see that the range high was taken right here, right? And from here I wanted to see an order block formed so I could take an entry. But what you can see is that we never formed any order block entry, but instead we kept expanding higher without an entry until the London close scale zone ended right here. And you know that after that I don't take any trades or any entry, so my trading day was done right here without taking any trades, right? So on Monday I stayed risk off for the whole day and did not took any trades, right? That's how I ended Monday without taking any trade idea. And that right here is one of the biggest lessons, right? Sometimes your bias could be right? You could have the correct key levels, right? You could have the correct timing, but if your entry isn't there, right, and your entry setup and your entry model isn't there, then you still have to walk away without taking any trades or executing anything, right? Because the reality is that you don't get paid for taking more trades. Instead, you get paid for trading your system and sticking to your system at all times, right? And just like that, Monday ended with 0 trades, but that was a win in itself because I stuck to my plan and didn't took any trades, just like my system and just like my model told me, right? That's what happened on Monday. Then on Tuesday, again, my directional bias was bearish and I was looking for bearish trade ideas, right? But obviously, I couldn't just force a trade idea right away. Instead, I first of all had to wait for a proper market context to form in the form of a key level and a candle range before I could frame a trade idea. On Tuesday, the major difference was that now we had a CSD. We had a change in the state of delivery as well, along with the other factors, right? We had a 4 hour CSD confirmation, right? This bearish confirmation after price closed below this candle, and this confirmed that now the order flow has turned bearish and we can expect a clean expansion lower towards the high time frame down liquidity, right? This 4 hours change in the state of delivery and this 4 hour CSD added even more conviction to my bias and to my analysis. So because of those factors, on Tuesday, I kept looking for a bearish trade idea. Now in the first half of the day during the London Open kill zone, we didn't had a proper market context, so I couldn't frame a trade idea. But then during The 5 a.m. candle, the 5 a.m. 4 hour candle, what happened is that price pushed into this 4 hour key level in the form of this order block. And along with that, we also had a liquidity purge above this candle's high, right? And once this happened, the market context, a proper market context was now formed, and the directional bias was also aligned. And from there, I dropped down to the 15-minute time frame and started looking for a bearish trade idea. Right here on the 15-minute time frame, after price purged this candle range high and tested the 4 hour key level, from this point on, I started looking for a bearish order block confirmation entry. And what happened is that after price closed below this candle, the open of this candle right here, we formed this new order block, right? I took this candle as my order block, put my entry there with my stop loss above the order block, and I targeted a 3-hour trade. But guess what? What happened is that instead, price went above and validated the order block, right? And I took a loss. But the catch is that it was a clean, a proper, and a fully planned loss and a valid loss, and I accepted it. Why? Because it wasn't a bad trade. It was a valid trade, and I take the same setup every single time, right? If it showed up. And this right here is exactly the real separation point between someone who has an edge and someone who just wings it, right? The reality is that I don't rely on being right. I rely on showing up and executing based on my logic and my system. And I know that losses are a part of that system, right? And because I know that losses are inevitable and they're a part of my edge, when I experience those losses and experience those losing trades, I don't get emotional, right? I don't start jumping around. Instead, I take that loss with maturity, journal that in my notes, and then move on, right? That's how you behave when you take a loss, right? Instead of panicking, instead of getting all emotional, you should just journal that loss, accept it, embrace it, and then move on. Looking at this 4 hour time frame, what you can see is that after I had that loss on Tuesday, what happened is that price pushed lower, and then right here on Wednesday, I had the same bearish directional bias, and I kept looking for bearish trade ideas. What happened during the London Open kill zone on Wednesday is that first of all, we had a liquidity purge above this 9 p.m. candle is high, and along with that, we also tested this 4-hour candle as a key level. This was my order block in this case right here, right? And once we purged the liquidity above this candle range high and tested this key level, from that point on, I started looking for a bearish order block confirmation entry on the 15-minute time frame. The key thing here was that all of this happened at a key time, which added even more conviction to this trade idea. Right here on the 15-minute time frame, what you can see is that after we purged the candle range high right here and tested the 4-hour key level at a key time during the London Open kill zone, from this point on, I waited for price to close lower so that we could form an order block. And in this case, we closed below this candle right here. And once we engulfed this candle, this turned into an order block. And then I waited for this order block to be tested. And then from there, I expected price to push lower towards the high time frame down liquidity. It was tested right here, and I took my entry here with my stop loss above the order block, and I targeted a 3-hour trade. And once the order block was tested, you can see that it had a clean expansion lower. Then on Thursday, we still hadn't reached the drawn liquidity, the high time frame drawn liquidity, and for that reason, my high time frame directional bias remained bearish, and I kept looking for bearish trade ideas even on Thursday. Right? On Thursday, you would notice that the market context and the approach or the logic that I was using was the same. And that's because my system in my model is mechanical and, more importantly, logical, right? And it follows the same principles throughout. right? That's what you'd notice in my system. You'd notice that it's repeatable. You'd see that every single day is the exact same replica of the other day. And that shows that I have an edge, and most importantly, a consistently repeatable and a mechanical edge, right? On Wednesday, I waited patiently and looked for the same thing just like I did on Tuesday and Monday. And now, even on Thursday, I'd be doing the same thing over again, right? And I know it's getting repetitive and it's getting boring, but that's what trading is all about. And that goes to show that that's what professional trading is all about. Like, you keep doing the same thing over and over again, you keep doing the boring things, and you don't change anything. And that's what brings you profits in the long run. So on Thursday, first of all, I waited for a proper market context to form before I could frame a trade idea. During the London open kill zone, we didn't had a proper market context, so I stayed risk off and did not took any trades. But then during the London lunch kill zone, during this 4 or 5 a.m. candle, what happened is that we tested this 4-hour key level, and along with that, we also purged liquidity above this candle range high. Now, you might be wondering, how is this candle in order block? And the simple truth is that this particular candle right here purged the liquidity above this range high, and then it got engulfed in the form of price closing below it. So, because of those factors, this candle turned into an order block. And once price retraced higher to test this key level, this order block, and purge this candle range high, from there I expected price to expand lower towards the drawn liquidity. And also there I looked for a 15-minute order block entry in the form of a bearish order block confirmation setup. Right here on the 15-minute time frame, what you can see is that after we tested the 4-hour key level, we then pushed lower and price closed below this candle right here, which turned this candle into an order block. And what I did is I put my entry at the low of this order block with my stop loss above, and I targeted a 3-hour trade. And you can see that this trade also ended up being a winning trade. And just like that, I ended the week with 3 trades, with one of them being a losing trade and 2 being winning trades, right? Each with 3-hour profits. And that way I ended the week with 5-hour profits.